Hello, friends. This is your host JP Mandal from JP Mandal Show. Wishing you all very happy New Year. So this is first episode of my 2023. So I would like to welcome you. So today I'm going to talk about I have a agenda mainly focus about how do you reset a 2023. Whatever happened in 2022, let's forget about that because right now is a new year, is the first week, and we all are in the process of starting a new year, planning the resolution for the 2023 new year. So again, I'm going to talk about as a middle America. That's my focus. uh, I like to serve the middle bracket, the income bracket of the folks here. My video, my content. So this is just for the educational purpose. So please don't take as any direct consulting service, or don't do decision based upon these YouTube videos or Facebook live videos. Consult your consultant, and to make any decision. This is for infotainment information. I would like to bring just to educate you about like home finance, budgeting, credit, the housing market, like how you can plan this one to tackle. A lot of people are saying that there will be recession. So if you have any question, please text me so I can cover it. And thank you for tuning in today. So again, as I said, first, uh, so what kind of income bracket is called middle America? So in the US, if you see the Pew Research Center categorized by we have lower middle class, we have middle class, which is middle class, and then we have upper middle class. So the targeting the income level from 32,000 to 53,000, those are like lower middle class. Then you have middle class, which is 53 to 106,000, and then upper middle class, which is 106,000 to 373,000. So here you see the housing market in 2023. Many people are expecting that when they're going to be a market crash. So nobody knows the fact that is going to happen. But you see the trend right now is Fed is trying to control the inflation. For that reason, the Fed has increased the interest rate, which has affected the treasury bill and other things, and then that's why the pricing, like a mortgage rate has gone up. So right now you see still we are transitioning from very much seller markets to right now prices has house of the gone down because interest rate is high. The affordability is the issue. So not many people can get qualified for the housing. So the sellers are not getting that price, but they still want to try that if they can get max value for the house. So you can see for last year the pricing, there is a overbidding has evaporated. So this is right now is a good time if you are in the market, if you like to buy house, even though interest has gone up. But there are some other solutions. There is a Biden program, there is just different home loan solutions program. So contact your home loan consultant so you can get the better deal. So let's talk about like how do we plan this new year. Especially you see the inventory level right now. Inventory level is still very low uh, in the market, especially in California. You can see there is not many new homes is building in big metros like San Francisco, San Jose, Los Angeles, San Diego, Orange County. So the deals are coming up. Those new house builders. So right now, because of you can get the really good deal for those because the price of the house has come down. So especially look into those if you are looking for buying. Usually also this is the first quarter of the year, so usually the inventory is less in this first quarter. So as you grow like in the year, there'll be more and more inventory. So the price will again the more buyers in the market, so easily what causes the price goes up. There is a more demand than the house is available, so that's the one reason. Another reason is many homeowners are right now locked in a very good interest rate for last 2 years with a low interest rate, so they are not in a hurry to just sell the house. So that's the reason the inventory is not coming in the market very fast. So that's the one of the reason you can see. So overall, I feel that in California, you are in California, and if you are ready to buy, you can buy whenever you want, because here market is different than other states of America. So what I would recommend you is just like first question is why you are buying the house, because you have to know why, your need versus want. Especially when you do the analysis of do I need like 3 bedroom, 4 bedroom, 5 bedroom, think about like my need versus want. Because if you want to build a wealth, you cannot be renting all your life and expect to middle class build a wealth, because the rent money all gone is so you will never get back. So the housing gives you the opportunity of forced saving by living there and paying your mortgage. So that becomes like, once you paid off, that that's like asset for you. Even if you just say you make 100,000 after paying your taxes, there is a rule as a loan officer we calculate is 28% rule. So you do not want to go more than like your DTI 28%, and overall DTI you want to be under the 36%. Because see, for example, if you are making like 10,000 a month, so your budget should be around like 36%, 3,600. Then you should plan for the emergency fund, then you should plan for the investment, for retirement, the other things. So buying a house is that's why you have to first talk to the loan officer when you're planning to. It is all financial decision, because once you make the decision, it's going to be long term, and it's not very easy to, once you buy the house, you can't go sell and buy again, because there is a cost associated with that one. So right now the tax season is coming, so definitely sit down with your tax consultant, get qualified. You can get qualified in advance. That's why you can plan. So better you plan, you will have better opportunity getting the better deal. So again, if you have any questions, especially in the San Francisco or San Jose area or Los Angeles, San Diego area, a major area, like you contact me. I mean, like there are several loan programs right now. The loan limit has also pretty much gone up, so pretty much you can qualify loans. Also, if you are self-employed, then we have also bank statement programs. If your tax, your filing is not that high, or if you are in the business for more than 5 years, you can file 1 year of tax return, and you can by showing you have higher income, then you can qualify the house that way too. Also, as a loan program we have right now, the average people are asking what will be the interest rate for sure this year. Nobody knows for sure, but average right now people are thinking about 5.5 to 6.5. But we have a loan programs like buy down, 3-1 buy down, 2-1 buy down, which is right now you can ask your real estate agent to give you a seller concession. They are giving this concession to deal happen, because not many people are able to get qualified with the high interest rate. So this is an opportunity for the buying the house. So again, so what I recommend is that the number one thing in middle class America don't do that, planning for the budget. Very first budget is your budget for the, especially you should create like at least 2 or 3 bucket the budgeting. One, you should have for your general purpose expenses, then for your emergency fund, and then your saving for the retirement with investment. Because if you do not do that, because the most important factor in creating wealth is the time factor with a compound interest. So even if you invest with a small amount in 20-30 years, that will have like significant amount for retirement. But if you whatever you make and whatever you spend, then we are again in that rat race. Always will have problem, and that's most of the immigrant here coming in America, especially. They have the issue of this managing the budget and managing the time. So especially even if you make California, the cost of living is so high. Even one income is not enough. 100,000 is kind of look like it's very minimal. Like how to survive. So planning the budget and planning your time and looking for other side income, part-time income to fill all other bucket is very important. Again, you should also manage your credit cards. How much your debt income ratio is going to very affect you in your house buying. So please maintain that one. Try to be in budget. And again, your credit. If you have better the credit, the better rate you get. So definitely work to improve your credit. So that I will say. So in these three areas, especially saving for the down payment, improve your credit, and getting ready, planning. If you plan better, you definitely get the better deal. So again, this year will be kind of year for transition. People are expecting that by the end of 2023, a lot of pundits are saying that interest rate will become around 5.25, but nobody knows. It depends upon how fast the inflation Fed can control, and then reduce the interest rate. Because right now you see, even if we go to grocery, you can see that pain, like everything is costing so much, and we can feel that pain. Even if you just go eat a burger, it costs you $12-13 with the. So again, year 2023, work on your health, because is all many people have these their IQ, AQ, but I believe in your PQ, like perseverance. Like how do you come back? The problem is going to happen. We are going to fail many times, but the question is how you again stand back, and how do you fight back? How do you plan it? Learn from the past mistakes and how you implement that one. So that requires a lot of perseverance. Your that kind of your awareness. So work on yourself, and working in your health, your mental thing is called SQ, like a spiritual quotient. So improve on how you think positive, because right now we came out from the COVID, and now the inflation, now the this price, like everything is going. So everything is so we have to plan, we have to come back, and 23 will be a better year for you. And if you need any particular one-on-one consultation, please call me. I have one question. Can you Binodji, thank you for your question. Can you bank provide a loan
covering the down payment money also?
Yes, Binodji. So there is several down payment program is coming in the country. Just a couple of months back, Bank of America started this free down payment program in certain area. So based upon your income, and especially some different community, especially African American and then Hispanic community, they have started this pilot program giving a 15,000 up to 15,000 or 3.5% that whole down payment free. But they are in a test pilot program. In several states there is a down payment assessment program. So definitely talk to your loan officer in that particular state, and get advantage. It is started by the city, the community, the county, especially the county level. There is a different qualifying criteria. The most of I have seen is you can get up to around 10% um, of those as like if you, there is a conditions though. There is you have to stay for 5 years or certain years, and if you sell, there is a different detailed matrix formula. But definitely you can utilize a down payment program. But I would say if you're in the low credit side, definitely start with the FHA will be a very good route. So just say if you are in New York, I mean like many different states, county, they have a program. FHA is a good program. You can start with the 3.5% down, and there are several down payment assistance program too. And you stay there for 1 or 2 year. After 1 year, if you move another one, you can convert this into rental property. A lot of people are doing the house hacking like that. So you know, talk to your agent 101. Write down your goals, write down your wants versus a need, and plan accordingly. Because as we come here, 1 year, 2 year, 3 year, 10 years just passes, and we rent. Average rent is right now in US is from like 1800 to 3000 has gone up. With that, if you plan a certain area, you can buy the house. So again,
There's also one question.
what is the question?
There is also one question.
What is the question?
It is wise to buy a house at this moment?
Yes, always, I say there's a good debt and bad debt. If you can qualify and if you can find the house you need, always is a good time to buy a house, because buying a house gives you, like you can start building the equity, you get the tax advantage, and there's so many advantages. But it depends what you need and what is your goal and where with this area. But I would say, especially if you are in California, if you can, there is always good time to buy a house. So talk to the right agent, experienced agent, and the good loan officers who can qualify you. So plan for those things I just said. And especially right now is buyer's time, because the interest rate is a little bit high but there is a pricing of the house come down, and there are several buy down programs, so you can still get the interest rate between 3.5 to 4.5 in that range, and you can get the house. So just say if you wait 6 months, what happens? Maybe right now if the average house is around 800,000, that will be 900,000. Maybe you get like a little bit interest rate down, but if you do the math, that time probably will be again more buyers. And so I think it's all depends upon person to person. It depends on person to person situation. You need to really I cannot tell here generally, but I'm just telling you just for the educational purpose. If you can manage your income, debt to income around like below 28%, 30% in that range, that's a good plan to have. But right now there are several loan programs which has goes like FHA. There is like higher DTI, you can also get qualified, but you need to based upon your personal the county you are buying the house, the loan limits, all different details. I would recommend you contact me or any of your favorite loan officer.
There is also one question from Santosh Saha. So also explain how people will cash out equity.
Yes, cash out equity, because just say for example right now, if you have a house and paid off, there are a lot of DST programs like deferred tax programs. You can get the capital gain and invest in other property, or you can just put in a trust and you can get the money. So it depends upon what cycle of your real estate cycle are you in, how much equity you have. Still you can this is a good time to buy home. If you have really good equity, you can take out the cash out, and still can you buy another property, because in California still there is a huge demand for the housing. Their inventory is still not much. So it's all about the math. And right now, it's still you see the 2 years ago and right now the property value is still very high. The people have a lot of equity, so you can definitely you can take the equity. You can, I mean, renovate, add the value to your house. You can appreciate. Just for example, you buy twoplex or triplex, put that on, and then after that, do some renovation. Value goes up. Take out the money. You can do that. So there's several way. I mean, like always right now equity reach. A lot of people are right now. Many majority of the homeowners.
So, okay, Jay, I have also one question. This is a question asked from my client. So the question is, what is like a 2-1 buy down? They're asking about the 2-1 buy down.
Yeah, so the 2-1 practice, so the several lenders have come up with the two buy down is especially this is a negotiation tactic with your seller's agent. A lot of sellers are giving. Just say for example, just say the normal rate is let's say 6.5, and the 2-1 buy down is like just say if you want to buy down the first year, like the first year you get 2% reduction, and the second year you get like 1% reduction. So that 2% reduction, say if your monthly mortgage is 4,000 just for the math, so you get like 2% reduction. That means like 3,000.
Like a 35.
Yeah. So that money you can first year whatever that reduction cost plus second year. So that money you can ask the seller to give you that the concession, the discount, and the lenders what they do, they put in the escrow company and then use this money to pay this differential. And after first year, second year is gone, and the third year is goes back to original rate. By the time situation change, you can do the refi, or you can ask the permanent one time discount. You can utilize against to buying the rate, so you can do that way too.
Yeah, thank you so much for clarification. Thank you.
Again, wishing you happy new year. So definitely this is about like housing. Regarding your protecting your wealth, definitely I would recommend whatever your annual expenses, at least you should buy 10%, 10 times of your that too for your
Here is also one question.
for the life insurance. You have to protect your housing and your family, and so definitely right now I see many places people don't have even life insurance and they're doing a GoFund. It is very bad situation. So at least you should get like coverage, even like term insurance, and then plan other further. Sit down with your consultant and plan your, because it is very difficult to build a wealth, but it is also even more difficult to protect your wealth. What's the question?
Here is also one question. Okay, I don't believe the house price has decreased significantly as it increased in the last 2 years. On the other hand, interest is increasing the day by day, and also people say interest rate will decrease and you can refinance later. Do you really think interest rate will decrease again?
Yeah, so like as you see the past 2 years of history, so we were hit by the big pandemic in 2022, and Fed come up with this like stimulate the market. They bring down the interest rate so low, and we got like a lot of stimulus money from the government. So with that, the people have money, so that's why the price of the many people who cannot qualify got qualified. So that's why there was huge demand for the housing. So when something demand goes up and there is less supply, the price goes up. So right now you see the interest rate has gone up, so the many people are left out. They cannot get qualified to get the loan. So there is a demand for the house has come down. So that's the reason the price of the house come down. It depends upon which zip code you are talking about. Especially in California is not much, but right now this is the prediction is 2023 is it will reduce around like between it'll be in single digit lower. For last year, you see in 2021 that was 22% increase, but this year right now they are showing that it will be a 5% decrease. So there is a trend, but it depends upon the market, which area you're looking. You have to talk to your agent and do further analysis for that one. So again, wishing you very happy new year. I will be bringing more show this year. every week. So please send me your question, your comments, your suggestions. How can I make this educational program better for you guys? I would like to talk about the investment properties, credit, and further coming shows, interest rates, economy. How do you planning for, like, especially budgeting? How do you improve your credit? All kind of finance related questions. So keep coming at me, and thank you for the opportunity. Again, wishing you a very, very happy new year, and looking forward to serving you in coming years. Go, happy new year again. Bye.